Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Busy one. We got two guests for you. Nick Shaheen joins us every Tuesday at 8:35. So we're joined by him. Plus, we're joined by Mark Chaimowitz at 8:15. He's a longtime trader. His site is weedhoppa.com. He's going to discuss his trading systems with us when he comes on in a couple of minutes. Joel, how are we doing this morning in the S&Ps?
We're doing good. We're in the green by 250. 04 1/4 is your last print. Your pre-market low right there at Monday's low, 96.50. So that's your major support. Coming back on the upside, 05 1/2. That was Monday's high. 05 1/4. That's your current high. So trading pretty technical this morning. Crude continues to head lower, pulling back off the $58 handle, down 41 cents at 57.70. You have gold knocking on the door, 1,300. We actually did get a print there at 13,090. Gold up 40 cents at 12.99.30. Silver back above 17 here, up almost a nickel at 17.16 1/2. And the leader in my portfolio, the new asset class, Bitcoin, trading up 4% at $10,045. $20.
The 10,000? We can break out our Bitcoin 10,000 hat?
You know what? Kenny Glick and I are ordering Bitcoin 20,000, 30,000, and 40,000 hats. You had a big head fund.
I'm ordering the Bitcoin $100,000 hat.
Really? Do you think you could get enough zeros on there?
I don't know. Maybe the $1 million Bitcoin hat.
All right. I will.
Or maybe I should get the Bitcoin Zero hat.
All right, we're not going to go into the big.
I have no idea where that's
big fundamental. I hope it goes down so I could just buy more.
You're gonna be. What do you call that? A moron when you buy more. Put more on.
Yeah, and I'm not going to go into the big fundamental discussion that we had last night on Skype, but we need a governmentless currency. That's all there is. We need a governmentless currency. I don't know if Bitcoin's going to be it or something, but 15, 20 years from now, governmentless
currency. Do you think the government isn't going to be coming in to regulate this, though, and taking it over? The government's not just going to because that's the whole point of why Bitcoin got started was really just, so people could easily launder money. It's for the underground economy. So you don't think the government can eventually figure out how to get into this?
Our government can't even figure out how to do anything, Dennis. Why would you think
yeah. Oh, I guess you're right. With Trump behind, you can't get any votes on anything. So maybe a good point there, Joel.
And I don't think that Bitcoin would be where it was if Trump wasn't elected, because people are waiting for him to default on our debt. And
there's got to be no defaulting on the debt. You can't default on the debt. Trump would love to do that. I mean, that's obviously what needs to happen when you got 18 trillion, or I don't even know where it is now. Where is it? Where's the debt clock, Spencer?
Oh, man.
There's that website that you can watch it go up. It goes up $100,000 a second. Where is that debt clock? Are we 20 trillion yet?
Worlddebtclock.com or something like that.
I get the
What is it? Is it 20? The 20 trillion?
It's scary.
I can't even count.
It's going so fast.
Of course it is.
I'm bringing it up too. Where is that?
It's $20.5 trillion.
$20.5 trillion in the U.S. And then China. Okay,
China's, they're nothing. They're
Canada's 1.6 trillion. We're way down there. We're like little, Mickey Mouse there. But the only thing, our GDP, when you look at it against their GDP, it looks a little bit scary. But okay, this isn't a debt show. This isn't an economy show here. Let's move on to stocks. I'm done talking Bitcoin here this morning here too, because not a Bitcoin show here, although we've been talking a lot of Bitcoin. We're going to have a Bitcoin show. So that'll be exciting. But let's talk some equities. Where do you want to go? Because we had a lot of interesting moves, but I think we should start with the most interesting move of their own, somewhat related to Bitcoin, but not really. Square, SQ. Did you see that move yesterday? I mean, it gets downgraded to sell, and I had it overnight. And remember, I was patting myself on the back for only losing $1 on that. Not patting myself on the back because I did not go short, though. Should have turned around and hit it short at 40. I think I hit 47.60. Was my sale yesterday that I got, and that was, just, lucky that it hadn't fallen that far. I had no idea the thing was going to fall another $7. That is just ridiculous. What a move.
40.37 was the low, 41 even, your last print. Trading down in the pre-market here. There's a little bit of support here at 40, if you are so inclined. 40.52, that was your low on the 16th. 40.37, that was your low for yesterday. 40.17. So 40, I mean, it's a number. I'm not going to, until it puts in a little bit of a double bottom or something, I wouldn't get really excited about that. Monster volume yesterday. You trade, well, Friday was a light day. Wednesday, it traded 44 million when it made that double top, 76 million yesterday. And the only thing, if you're trying to buy a pullback here, there's a lot of people that are long from a lot lower prices. That $40, $38, $37, $36 won't be, yeah, maybe they missed the top, but that's one thing you have to keep in mind when you're buying the pullbacks. A lot of competition back on the upside. Dennis, where should I pick a 50% retracement from? Because, man, there's a lot of, maybe this $32. I mean, it's tough. I mean,
I don't think you're getting to 32. I think you're going to see a 2-day move here, and I think you're going to see more of a little washout here, possibly at the open. I love my 2-day move. That's, for the Johnny come latelys that came home last night. So Square did what? I want to come in here and ring the register. They called their broker this morning, and they're selling this morning. So usually when the 2-day move, you see the washout in the first 15 or 20 minutes, and then it turns. So I wouldn't be surprised if Square loses another couple bucks, but then actually starts to find a bid, say, around 9:45, 10 o'clock shortly after the open. But that being said, where is it going to go to, before 10 o'clock? I think you could see this under $40. I think you could probably see maybe even 39 or 38. I'd love it. If it got down to 35, I think I might buy it. So this is one that I wanted to buy. And I did buy a lot of times. I day traded it all the way up and actually did very well on the way up. Had it overnight, how many nights, in the last 2 months because of that buy imbalance we've been seeing every morning. But I think there's still buyers below that want to own Square. And I think this is going to be a good opportunity. It's just a matter of when to strike. So I would love another 5-6 point pullback and pick that thing up at 35. I don't think you're going to get it though. So watch the trading action, watch for the turn, maybe, late morning here. And I wouldn't be surprised if it turns and finds buyers again, because there's still a lot of people that believe in Square. I'm one of them.
All right, 40. I mean, you can look at your daily lows here. I'm not anything really to hang your head on. 39.51. That was your low on the 14th. And then the previous day's low was 38.21. And Dennis, I just want to tip my hat to you because you said, the Twitter was getting a little bit of a boost from the Square,
I tried to short the Twitter too. And here I was looking and I was like, you know what? Maybe Twitter will put in like a little double top up there in the 22.40. And I was higher and it opened right at 22.40. And if you didn't get the opening tick, you never got a chance. And I just missed it. And then it went straight down. And, Twitter, for whatever reason, is trading off Square right now. I know Twitter is up here in the pre-market a little bit, but watch Square. If you're trading Twitter, watch Square. Wouldn't be surprised if Twitter starts to turn around and show some weakness as well. If Square turns, though, and starts to look higher, then Twitter will turn too. So Twitter is like a muted version of Square right now. So if you look and you stick the two charts on each other, obviously Twitter's moves are a lot less than Square, but they are moving same directional. So as Square goes up, maybe 5%, Twitter gains 1%. Square falls like 15% yesterday. Well, Twitter has a bad day and falls a couple percent. So definitely following Square if I'm trading Twitter today.
All right, Spinner wants to know why he wasn't buying the Buffalo Wild Wings when it was below the deal price. Now a higher offer.
It's my worst miss of the year because, and I talked about this, I've complained about this too. It was trading around $100 and it was forming all that support back in October. And I looked at it and I'm like, I want to buy this because I started to see some value. It had come significantly off. I was looking at the financials. The whole franchise was worth like $3 billion at that point in time. And I was like, you know what? This is just overdone. I'd come down from the beginning of 2017 when the stock was $175, and I had it written in big letters on my sheet, buy BWLD in your investment portfolio. And then, but I'm like, earnings is coming in 2 days. I'm like, I'm just scared on the earnings. I don't know what's going to happen. I'm maybe going to wait till the earnings. And then the earnings came and the thing popped $20. So then I'm like, okay, well, now what do? I was hoping for a pullback. It pulled back about 10. It didn't pull back far enough. And then obviously, eventually got the buyout offer and it's 157. So here I could have bought that stock at $100. a month and a half ago, even just over a month ago, and been selling it this morning for 156. So one of my biggest misses of the year.
All right, and let's see, it's getting a little bit of a pop here. I was looking at some of the other stocks, and not a lot of sympathy going on with this one. Dennis?
Well, you knew the deal was coming. I mean, the stock's up 40 points from where it was a month ago. We knew something's cooking. We didn't know what the official price was going to be, but we do have the official price. Spencer, give us the details on the official announcement of the merger with Buffalo Wild Wings, and it's Arby's, right?
Arby's
owns Arby's.
Arby's for Buffalo Wild Wings for $157 per share.
It's done. That's cash. There's no antitrust. A million restaurants out there. This is going through. So if you're buying it this morning, 156, it's just the time value of money here. So that's going to keep it down a little bit. There's really almost zero risk to this deal not going through. So 421,000 shares. Congratulations to whoever owned it yesterday. You got 10 points. The risk arbs maybe we're pricing a little bit too much of a discount, as Spinner was saying there yesterday, and you get another $10. So congratulations to the risk arbs who owned this.
And just real quick before we go to our first guest, Ed Parker here is doing his homework overnight, and he notices potential double top in Roku, right? Go to the daily charts. You can see it made an all-time high at 48.80. We're trading up at the pre-market up $1.88 at 48.40. So, give it to that, 48.80. Give it, 49. Of course, you get
$50 really.
50,
it
really.
Takes out 50. I'd be scared if I was short this because these things just go into rocket ship mode. I think you might be fighting it a bit. I think this is so hot.
Yeah, but it just
so
went down.
What's Nick say? And Nick's coming on here later, but what is it? Too high to chase, too hot to short. Even if you call and maybe you got that level. If that level holds, sure. But I don't know if that top's going to hold. I mean, this thing is just hot.
What about all the people that saw it go to 48.80 and then saw it go to 34.5, 35?
Maybe, but they had a chance yesterday too, and it's right back up here again. I mean, you've had, if we're trading up 47.75 yesterday. It looks like to me, the big move, the consolidation, and now the start of another potential big move when I'm just looking at that. So if it takes out 50, I think, I think the Bulls are in total control.
All right, Spencer, you got a new guest for us coming up.
I do. Mark Chaimowitz. He's a trader, longtime trader. His site is weedhoppa.com, and he's going to talk to us about how he targets the stocks that he targets, specifically low float stocks in pre and post market sessions. So right up our alleys. We'll be right back with Mark in a moment. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel joined by Joel Elconin and Dennis Dick, and we're on the line with Mark Chaimowitz. He is a longtime trader, author of the site weedhoppa.com. Mark, how's it going today?
Okay, great. Good morning, gentlemen. Thank you very much for having me on. I'm very excited.
Thanks for coming on. We're excited to have you on. So you have been a day trader for nearly a quarter century. Not to make you feel old, but why don't you talk us through your systems right now and the stocks that you target on a day-to-day basis?
Okay, well, let me tell you how I evolved around the trader, if that's okay. Back in 1987, after the market crashed, retailers were complaining that the market makers weren't answering their phones on the level 2 machine. So NASDAQ implemented what was called the SO system, acronym for Small Order Execution System, which was an electronic way of holding the market makers accountable for their inside quotes once every 20 seconds. That was really the way online trading started, technically. I moved around to different various firms, and ultimately I went on my own. I would say over the last 5 years, I was trading prop trading for the previous 10 years, and now I'm on my own. What I do now is I try to find small to mid cap stocks that have certain criteria that meet my that meet the criteria that I'm looking for. I look for small stocks that have small floats. I look for stocks that have high short interest, and it also has to meet the technical chart that would want me to get involved with that stock. And I would like to give you guys an example of something that I'm looking at. The stock is EXPR, Eddie X-Ray Paul Robert. This is a small retailer that's due to report on Thursday morning. Now, this is interesting on a few different levels. This is a stock that is a retailer that actually has a decent balance sheet. If you take a look at most retailers, they have atrocious balance sheets where the debt is totally dwarfing their cash. This is an example of a stock that actually has more cash on hand than debt, which is extremely notable. If you take a look at the chart, this is the first time I believe that has gone through the 50-week moving average since way back in May, I believe. And interestingly enough, the last time they reported earnings, which was about 3 months ago, was the first time that they didn't guide down in about a year and a half. So these are the kind of examples of everything that comes together where you have the technical picture fitting what I want, where you have the share structure fitting what I want, where you have an actual big short interest of banking on something going wrong. When they're wrong, they have to come and cover their stock. So these are the kinds of catalysts that I look for in the stock.
So, Mark, what are the type? Break down further the technical, like what the chart has to say.
Okay, I'm a very meat and potato kind of guy. I am not too sophisticated, technically when it comes to charts. I've been trading for 25 years using the same parameters. I use the 10, 50, and 200-day moving averages, along with various stochastics and volume. And it's basically very simple. When I see moving averages converge, when the 10 goes through the 50 on the upside, or the 10 goes through the 200 on the upside, that's extremely bullish to me. If a stock, on the other hand, an inverse, if it goes down, if the 10 is going through the 50 or 200 on the downside, then I'm bearish. It's really, really basic stuff. When you have a situation where right before earnings, a stock changes its I would say sentiment from bullish to bearish based on the moving averages, to me, you have the tailwinds at your back and you go for it. Now, they don't always work, obviously. And I put out about 10 plays a week on my website, weedhopper.com. That's weedhoppa.com. And my theory is I've shown that I've had a number of plays that have gone up between 1,000 and 2,000%. These are 10 and 20 baggers. So I discount the possibility and the probability, actually, that I'm going to be wrong a lot of times. But thankfully, we're right about 50% of the time. And I think with this formula, I think it's a formula for success in the long run if you keep at it.
Now, what is your time horizon here? Are you going intraday? Are you going swing?
Well, being that I'm an earnings catalyst kind of guy, my time horizon is actually quite short. I am always looking for out-of-the-money options that are closest to the strike price, but I always look for the closest option expiration cycle. I'm an option player and I'm an after-hour market player. The after-hour markets are actually a market that I think most of the listening audience doesn't utilize enough. It is a market that is actually quite illiquid. So you have to be very, very, you have to be on your game if you're getting involved in the after-hour markets because of the illiquidity. But I find if you have yourself hedged on options, either on, calls or puts, it gives you added flexibility to play the after-hours markets, especially after a catalyst like earnings.
It's a great
So
point.
for an example.
Okay, yeah, go ahead. Give the example. Yeah.
Let's go back to EXPR. I don't know. I'm just touting this one because it's coming up in 2 days, and I think it's something that your audience should look into as an example of what we do. If EXPR guides down and they crap their pants, pardon the expression, I have no problem shorting the stock after hours if I'm hedged both ways. Personally, we have the $9 calls, and I plan on being long the $8 puts in case I'm wrong. So I have no problem shorting the stock if the numbers are bad, or going long the stock in the after hours markets, as long as I'm protected on each side. Now, if I have 100 calls, for an example, which gives me the right to either buy, or if 100 calls gives me the right to buy 10,000 shares. If the stock is gapping on the earnings, I have no problem offering out small stock, 500 shares or 1,000 shares, if it gets close to that $9 strike price or even higher. So it gives me kind of a hedge, and it gives me kind of a cushion to continue playing these kind of plays if I know I can cap my loss.
It's such a great point you're making, and something that I've utilized in my trading for a number of years. Whenever I have options, open contracts, and I'm long, I always, try to, look, at the after hours action, because that's where the markets are thinner. And I mean, you're giving an example. For example, you're long the 9 calls. Stock goes up to 950, you can start shorting the stock against your long calls, locking in a 50-cent gain in a worst case scenario. But also, if the stock turns and reverses, now you short the stock. Now you can actually participate all the way on the downside, and starts going below 9. You don't have to exercise your calls, and you just have an open ticket on your shorts. So I think it's something that so many retail traders miss, is trading the stock against their option positions, because they'll say, oh, well, the options are closed after hours, I can't get out of that. But yeah, you can do the stock against your options. I mean, if you have a really small account, it's difficult to do that because margin is going to start to ding you. But if you've got the margin, I think it's, crazy not to utilize the after hours action in those open option positions.
Precisely. And that's the reason why we only deal with small to mid cap stocks, because we are limited in our accounts. Or I imagine the basic retailer doesn't have a multi-million-dollar account to trade, so we can't play the Googles and Amazons of the world. But for starters, their premiums are way out of whack, and it doesn't allow for our risk tolerance to get involved with those kind of stocks. So
yeah,
if we take an option, let's say we want to do a straddle on a particular stock that's coming up with earnings. My general rule is, if the implied volatility is more than 10% of the actual cost of the stock, I don't get involved. But the difference between playing a big market cap stock or a high beta stock like Google, or a stock like EXPR, is that you can probably buy both sides. Let's say EXPR, I think it closed 8.25 yesterday. If EXPR was at $8, I'm pretty certain you can buy the puts and the calls for a combined $1. To me, that $1 is less than 10% of the stock, which is $8, and it just gives me, the ability to buy or sell the stock, because if you're going 100, let's say 10 calls, it's no problem for most people to come up with $8,000 to buy or sell the stock after hours. Google, on the other hand, you're going to need for 1,000 shares, you're going to need $1 million. For Amazon, you'll need $1 million to cover yourself, which doesn't fit into my criteria.
You've almost got to be with a prop company or something, unless you're independently wealthy. If you're going to be trading the Googles and the Amazons, and like you said, you need $1 million, you almost need to be with like a prop company that's going to give you that type of obviously margin to be able to employ those types of strategies. But great point you're making. Retail trader could totally do this EXPR, and if you got 10 grand, you could participate in trading the after hours against your options positions. So great points you're making.
Absolutely. And people also have to understand that sometimes you can get fortunate. You're fortunate where if you have a call on EXPR and the stock goes up $1, and like you said, you short it at 10, and if you have a put, you can not only make money on the short, you can actually make money on the put if it goes below that strike price, and that has happened to me often. So it's a 2-for-1 kind of deal.
How with the after hours, and it can be tricky, just talk about like your order placement on something like that, because what I've noticed on some of these stocks, I mean, they come out and sometimes there's hardly any market on these things at all, and if you start throwing offers out there, sometimes actually those offers can scare people and the stock price could start to move away from you. Just talk about like how you strategically place those orders so that you don't impact the price.
That's an excellent point. I believe that you have to use certain platforms that allow you to put out hidden orders. Hidden orders are very, very important in the after-hours markets that a lot of people are not aware of. What I mean by hidden orders is that there are certain platforms that allow a trader the ability to hide their order completely and shave off either a bid or an offer by a penny, or even less in some cases. And that's something that I think a lot of listeners are not aware of, and I think it's to their detriment, which does not allow them to play the after-hour markets properly.
And Mark, you're going long and short, correct?
Correct. Not in every single case. I try to go long and short because to me that's the most conservative play. But in a case like EXPR right now, where I'm extremely bullish on it based on having all of the tailwinds at my back, the share structure, the short interest, the technical outlook. Right now, I actually do not have puts, but if the stock runs up into the earnings, I will either short the stock itself or buy some puts to hedge myself.
All right, we've been
on. I generally do like to straddle. I like to buy the puts and calls, provided that they're not too expensive.
Mark Chaimowitz has been on the line with us for the past few minutes. His site is weedhoppa.com, weedhoppa.com is where he posts his trades for his subscribers there. Mark, thanks so much for the insight. We will talk to you again soon. Have a good day.
It was a pleasure. Let's do this again.
All right.
Very informative discussion. Some stuff can get extreme, and if you do have some retail platforms, sometimes they don't offer these types of things, but most of your exchanges allow you to place hidden orders out there, and all that is, it's an order that's not showing up, but it's actually in the book. So if I use like NSDQ, which is NASDAQ, and I am just place a hidden order to sell a stock at $40. To buy the stock, maybe there's a bid at $39.95. I can put a bid at $39.96 or $39.97 hidden so that the penny jumping algos won't get me, because there's automatic penny jumpers as soon as you're out there that they want to jump your order. So, that's just another tool in your toolbox there. And if you don't have those, ask your broker to get them, because hidden orders, are very important in this market, just because you have so many algorithms that will just jump your order all the time.
All right, 829 S&P futures trading up 275, 26.0450. Yesterday's high 05.5, the high 05.25. Dennis, 830. We just turned any imbalances to take a look at.
I'm just looking at them here right now, and yes, there is. And Square, actually, I guess our Square guy is officially gone now. It's 153,000 to sell here in Square. Square just starting to show a little bit of weakness as well. It's $40.50, down another 50 cents right now, 153,000 to sell. GE, full disclosure, I'm long GE because that buy and balance seems to be there every day for the last few days. It's there again. It's 288,000 to buy. So I'm long GE, obviously my best portfolio, but I'm also long it for a trade as well right now. 288,000 to buy in General Electric. CRM, 53,000 to sell. That's significant for that stock. It's a $106 stock. So if you see CRM actually just showing a little bit of weakness after 8:30 because that imbalance became public knowledge there. It's all about information. I mean, that's what the trading is. And this imbalance information is another thing you need to be getting from your broker. And if they're not giving it to you, it's difficult because there's other traders that are going to have that edge on you. We know when you look at something like that, all of a sudden CRM shows me a 53,000 share sell imbalance. This is out of the blue. This is for the opening. It's probably going to open weaker. So, unless somebody comes in, another institution is going to be buying those 50,000 shares, stock could potentially open down. So if you're sitting there with a bid thinking, oh, the S&Ps are trading higher here, why is CRM trading down? I'm just going to come randomly buy it. You might be missing an important piece of information. And, we try to give you and try to keep you as informed as we can on pre-market prep, but we're also trying to educate you on the tools that are out there and the tools that you need if you're going to be successful in this business.
And I just want to talk about a level. I think we got to be more consistent with our levels from day to day. Talking about GE yesterday, I gave you the number of the day, the number of the week, the number of the month, the number of the year, number of the decade, 1850. And boom, it hit it.
Decade, I love that.
It hit it yesterday too. And I was looking, I was thinking, man, is this thing finally going to bust out? And sure enough, it got over the 47, got over the 48, went to 50. And boom, came back and closed near the low of the session. So you got to keep an eye on that one here. Nice volume traded yesterday. Ended up negative on the day, but building a range now between 18 and 18.5. But I still think we have a little pressure there. People, I'm just dumping this now. I'm going to take, because probably what do other losses people have in their portfolios? That's probably like the only one. So they celebrate.
That's me. I'm looking at it tax loss season. I think there's 4 or 5 stocks that I'm down with. Triple D is one of them as well, and that might be one that I'll take a loss on as well.
On the pre-market show. Give us your setup here.
Oh yeah, so I was looking here just looking through some charts last night. And I had 4 stocks that I was like, wow, these are nice little cup and handles, looking a little bit bullish on the charts. And they are Triple D was one of them. So because we were just talking about that, had the nice support $8. You can see the bottom of the cup and form a little handle there. So if you like patterns, and I'm not a big pattern trader there, but sometimes when they jump out at you, sometimes they work. Triple D is starting to show a little bit of life here. Also IBM. And IBM we've talked about in the show, and we kind of liked it when it filled the gap down to 147. Well, we're in consolidation station here right now in IBM. The last 3-4 days ranges are virtually identical, all butting its head up against that 152.50 area. If we can break out through 152.50, I think IBM can see 155. So it's all about setups. And if you get up there, a stock doesn't break out until it actually breaks out, but get above 152.5. It's pretty much open until 155, so there's a couple points in there in IBM for you day traders. Also, AMD. I own this one in my invest portfolio, which hasn't been a great one, but as a trade right now, it looks interesting as well. I'd say as long as it stays above 1130, you've formed some good support at 1130. If you can stay above that, it's interesting trade as well. And then the other one I was going to talk about was CSIQ. Canadian Solar. And I also own this one in my investment portfolio there. Had it for a while. We know our buddy Gordon Johnson's been bullish, so I stick with him. He knows that sector better than anyone. I look at this one. If it could get above 1830, it's butting its head up there. I always look to First Solar as a leader too. And First Solar had a pretty good day yesterday. It's trading up a little bit here in the pre-market as well. I think CSIQ is looking like a little bit itchy there, and maybe thinking about that $19 level again. So if it can get above 1830, maybe you could see 19 CSIQ.
All right, I just want to mention Beamer here. Nice setup, and remember what Sean said on Friday, and purely rumor and speculation. But man, if they're sitting on any blockchain patents or anything along those lines, they break that up. It's going to be a $175 stock. 4 highs right there, 152, 50 area. I like that setup. 4 lows in the same area too. IBM. Yeah, that has to be the technical setup of the day there. 150.
Go for whoever wins. And I mean, you play the range until I wouldn't just be coming in here and buying it when it's at 152.20 or 152.30 because that's the top of the range. Wait for it to actually break out. And if it breaks down, it decides to go the other way, you got to set up there too. Like Joel's saying, it gets through that 151 area. Then it starts to look weak. So, sometimes you can just sit back, let it trade in its range, and then go with the winner.
All right, 8:35, and every Tuesday at 8:35, we bring on Nick Shaheen. He's the author of Create Income with Option Spreads. Gives us a fundamental and technical outlook on the market. And Tricky Nicky, where are you?
I'm right here.
Nick, how you doing? You took a vacation. How could you take a vacation on us?
I know, right? And I got sick on the vacation, so there, I deserved it, I guess.
Oh man! All right. Well, you still sound like you're a little under the weather. We can make it a short segment today, if you'd like. But
nope, I'm good.
Okay. So where are we here? Going into December, year-end rally. Is there anything to derail this market?
Well, there's still no fear, no reason to sell. We're just creeping up, and it's hard to just blindly chase rallies. What's worked really is selling risk into extremes that are not likely to come. So when we had a little tizzy not too long ago, we sold some credit put spreads, and I spread the risk across the SPX, SPY, and Apple just to capture some premium because I couldn't chase anything. And so that's what worked well. And somebody asked me, so should I sell credit call spreads? I said, well, if you want to, but I'm not rushing into trying to sell a credit call spread into an Apple credit put spread to make it into an iron condor, just because I have more faith in the levels where we can bounce and not enough faith in the fact that they won't run to no end. All they need is one piece of good news. So this week we do have a few triggers. OPEC was one, but usually there'd be like chatter out by now on an OPEC cut or no cut meeting with Russia or without. So, this is pretty interesting to see. Oil has benefited tremendously. We hit almost 59 before we dropped a little bit in the last couple of days.
59.05.
Yeah. So it was hard to short oil. And, maybe we dip a little bit in the oil here. I'm not sure. Gold looks good. So that kind of like makes me not want to chase the regular equity markets, because usually when gold rallies, there's a reason for it to rally. So on the daily, gold looks like it wants to break out of a neckline. So if somebody's long gold, should benefit if that happened. So I don't blindly chase, but selling premium to just waste time has worked well.
Yeah, let that time be on your side. Let's go to Tesla here. And this thing, it looks like it's winding up here. It had earnings report, made that low on earnings day, and it's slowly been building a base here, kind of similar ranges here over the last 4 sessions. Any thoughts on Tesla?
Yeah, it is at an important level here. It's in between a lot of important levels, which makes where it's at hard to get out of. So let me see here. Well, I lost your window. And anyway, okay. So I was going to paste the chart, but the point is it fell down to 300. And 300 was important to hold. Otherwise, it would have gone to 280 and lower. And it's now trying to get out of 320, which is also strong, because it was a battle zone, crime scene, so to speak. So it's stuck in a hard zone. It will need a headline to break out of 320 and below 300. Meanwhile, it's just going to meander. So I would be brave enough, can you believe it, to say that? I would be brave enough to sell some credit put spreads if I believe in the company rather than buy calls in it. Because I think it's harder for it to go through the calls and benefit me than it is to just kill time and benefit me from gaining on the credit put spread. So if I'm bullish Tesla, I'd sell credit put spreads in it. And if I'm willing to buy it, I may even sell puts in it. But that depends on the individual investor. So that would be the way I would play Tesla, because it is stuck in a hard spot.
Nick, let's jump over here just to this square chart. I want to look again at it, because this had an incredible move there yesterday. We just talked about it, but I want to get your thoughts. Here's a stock that everybody loved. It gets one downgrade, and it falls 17% yesterday. It's unbelievable how, flaky, I'll call this market. Like it's just, it's nervous, such a nervous market. How's just turned that quickly?
Yeah, I call it a fickle market in that case.
Fickle's a good word too.
Yeah, because what have you done for me lately? For a while, Square was the new kid on the block. Buy, follow it. So it made sense. PayPal was there, the banks are there, Visa, MasterCard, they're all going to the moon. I tried to short Visa or MasterCard at one point or two, and I just got so frustrated. I just forget about it. I don't even look at them anymore, because there's nothing I can do. When something is that high and I can't touch it by my way of trading, I just stop looking at it and I wait for it to fall down to where I can, now I can see something I can trade. So now there can't be just the one downgrade that caused all of this. So maybe somebody knows something we don't. I'm not sure. So I would wait to see how it's doing today and tomorrow and see how it handles this new zone. And if somebody wanted to chase Square and they missed the opportunity previously, well, they should start looking at it here, and maybe they can dip into it. I would dip into it via credit put spread, because that's what I do. It looks like it's going to be down today too. At least what I'm looking at.
Little through from yesterday, yeah. Set us up a trade. Let's just say you're bullish Square. You got this big pullback and you're licking your chops. Set us up on a potential options trade here, as opposed to just coming in here and trying to buy the stock.
All right. Well, you can buy the stock and hope it rallies, or you can sell risk into the stock and benefit from it. So I'll give you an example. So if I go out to January, as of yesterday's premiums, which were going to be more inflated today, a $34 put is about $1 as of yesterday's premium. So if I'm willing to own it at 34, and I'll show you where 34 is on the chart, then I can sell that and collect the money. And if it doesn't go there, the money is mine. So that's how you create income, or you own the stock at a discount. So for example, if I'm not brave enough to own it at 41, but I'd like to participate in a bounce, instead of buying the stock and hoping it rallies, I sell a put and hope it falls there so I can buy it at a further discount. So I don't know where it's going to open today, but it's going to open down. So that dollar I said is going to be a lot more. So I can go lower than 34. I can go to 28 or 30. Or if I wanted it via limited risk, I don't want to own the stock, but I do want to try to do that. So I would sell a put spread. So I would sell the 34 and buy the 33 behind it. I would collect whatever they give me, 12 cents, 14 cents. Sounds piddly crap, but it's like 20% yield on risk. Because the risk is defined because you sold a put and you bought a put lower to limit your risk. You're no longer on the hook all the way down to zero. You're only on the hook from the one you sold to the one you bought. So if you sell the 34 and buy the 32, then you have $2 worth of risk minus what you collect up front. So that's the credit put spread. But somebody that wants to own the stock and said, I wish you had bought it at 34, sell a $34 put. If you're able to buy it at 34, if it falls to 34, you own it at 34 and you keep the premium. So your really break-even point is about 33. So that's the way to do it. And that's just in 52 days.
You just mentioned the stock, and DC wants to know about PayPal, and I'm curious on your thoughts here too. Like when I look at PayPal, I think, well, Square just broke down. PayPal, very related to Square, had a little bit of a rough day, probably because of Square yesterday. I look at this and think if it takes out yesterday's low, and I think it's going to pull a Square because I was with a downgrade and that was really inflated, and Square and PayPal hasn't had nearly the move up that PayPal did. But I think there's, it could be a little pressure on something like this just because it's related to Square.
Well, PayPal is, I think, in a different boat than Square. PayPal is a little more established, and
yes.
It actually, it's expensive from a PE perspective. At least you can calculate one, and so it's a different story, in my opinion. Square is a new kid on the block, and maybe it makes it, maybe it doesn't. It's convenient. I know small businesses. I think it's where it's got its niche, but it's a somewhat of a different story. So PayPal is still strong and hot. It's way up there. But it has tangible value. So if I'm selling puts, I can calculate where I think it's worth the value. So it's still high for me. I would not sell credit put spreads in the stock that it's at all-time highs, just because I think I can get better prices if I wait a little bit. There are plenty of stocks out there. I don't have to trade everything every day. So I would wait for a dip in PayPal. And yesterday's little dip is not much. It's still near all-time highs. So I would hold off of it and look into Square and why the downgrade happened. Look into their reasoning. I didn't read the article. So maybe they do give you a reason to think about it and say, wait a minute, maybe it has gone too far. Or maybe you just don't believe what they're saying and you dig in your heels on Square.
Nick, we got to ask you about just one more issue here, and this is a hot one here coming out of the chat. XNet is a Chinese Bitcoin name. Some chatter that this thing is a fraud. Before we comment on this one, I know you've been following the Bitcoin here across that $10,000 barrier. What do you think now, Nick?
I think I'm an idiot. for not buying Bitcoins. No, we've been debating the Bitcoins in the chat room, and we have a few that just plugged their nose and bought it at 2,500, and they've been investing since in it and educating all of us because they're going through the process. And everybody's saying it's not a currency, whatever. Here's the thing of Bitcoin. It as a forget XNet. I don't know what else I can say about it. It's just a casino. It's Bitcoin, maybe it is a currency, maybe it's not. For me, it's definitely not. I wouldn't price anything I'm selling in Bitcoin just because it's not practical. I would need an app to manage the adjustment on the price as it changes price itself. So, but just like gold, I consider it like gold. Gold is rare and we want it, so price will be high. Bitcoin is rarer than gold because it's finite. They're not going to make any more. And everybody wants it. So it's going to be up in price. And it's a fact. You can't, it's a matter of math. People want it. There's not enough of it. It's going to be expensive. So don't fight the currency part of it, because even if it's not a currency, it never ever becomes a currency where it's actually a currency where you can trade stuff in it. It's still like gold, valuable, and people are going to want it until it is busted electronically or something like that. But until then, don't fight the trend. I mean, it's going to go up and up until no end.
Real quick, Rob Hood wants your thoughts on Sturm Ruger RGR.
What's it doing this morning?
I always ask that. Let's see what we have a trading.
It's just flat, no trades.
Oh, okay,
trades.
good. All right, so it had a good day yesterday, and it's knocking on a level that has been in contention. So my thing is, you can jump the gun and buy calls in it to see if it breaks through the levels, or you can wait until you see a breakout and then try to catch it and hope that you're not too late. So if you know the internals of this company, it looks like it's making higher lows and knocking on that roof. And if it breaks through the roof, it's not a hard line in the sand, so use your judgment on that one. But anything around 52 plus would probably tell you it's going higher. So if you know the company, that's a bet I'm willing to make on that one.
We've been on the line with Nick Shaheen. He's the author of Create Income with Option Spreads. Joins the show every Tuesday to give his fundamental and technical outlooks on the market. Nick, go get some tea or something and take care of that voice, and we'll speak to you again next week.
Thanks, guys.
All right, S&P maybe stuck here, still trading 2604.75, up $3 on the session. Dennis, that sell imbalance, people are jumping the gun on this one.
They're hitting it down more. It's fallen another 40 cents. I mean, they move off that. They move off that information, and boom, 282,000 to sell is significant. Like when you look, Square in the entire pre-market has traded 447,000. Now it's telling you there's 282 more to go on the open. So it's not surprising the stock's fallen 1% since that information came out just 19 minutes ago. I mean, it is market moving information. If you don't fall after the closing imbalances are almost useless now. I've talked about that before, where there's just so much institutional action. You'll see 100,000 to buy and it'll pair off, and this thing will move 2 cents. The pre-markets, there isn't as many institutions. There's very few institutions actually trading not the opening imbalances. Very few institutions that are trading stocks on the opening compared to what there is on the close. It's probably 10 times more action on the close. So you got one or two big guys, big guns coming on the open. That will move price, and that's what the imbalances are showing you. So, we see right now Square 282,000 to salary talk GE. That buy imbalance has been there for multiple days here now, which is why I'm starting to like it a little bit more on the chart. 360,000 to buy. Teva 156,000 to buy. Teva has been hot for a little while here. It was $11, 10.85 just a month ago. It's now 14.95 here in the pre-market. Continues to go up. Even had analyst action where Wells Fargo came back when reinstated their underweight on it, an $11 price target. Doesn't matter. Teva shrugs that off too. Again, this is an ADR, so it's already active over in Europe here this morning. But impressive move here for Teva as well.
All right. We covered the technical formations you liked, the cup and handles and IBM and AMD. And we also covered any earnings today?
Well, there's not that much in the earnings calendar. We have Marvel coming up tonight, MRVL. Remember, if you're trading CAVM, that trades off of the Marvel numbers now. And I think the ratio, I can't remember off the top of my head. I think it's around 2. So basically,
it's kind of funky. It is.
Yeah. You got to look at the ratio there. But there's more other news too. UNH guidance had this morning. UNH was trading down significantly, but popping back. Hormel also had guidance last night. Didn't move much on it though. So just watch those two stocks. Sometimes they can have some move after. We haven't talked about those Bitcoin plays. And those stocks were absolutely insane yesterday. We talked about Riot. We talked about MARA. We talked about XNET. And we talked about SRAX. SRAX yesterday. This is yesterday. I'm going to my sheet from yesterday. In the pre-market. No, it was MARA. Sorry. MARA yesterday in the pre-market got up to $16.99. Today it's $5. I mean, these things have so much risk. There's obviously no return there as well. Stock went from $1 to $16.99. Now it's back to $4 or $5. But you've got to realize, and you need to look at the pre-market action as well, because somebody that was just coming in yesterday and seeing MARA trade up in the pre-market and thinking, okay, this is going to really go. And they didn't look at the pre-market action. It had already went. We told you about this on the show yesterday. It went at 4 a.m. It went at 4:15 and 4:30 when it got silly. It was actually already on its way down yesterday. So if you were using that as a tell yesterday, then, you may have actually been coming in a little more biased to sell it as opposed to buy it on the open yesterday. And if you were doing that, you'd be making some pretty good money yesterday, because yesterday it opened at $8.70. It's now $4.96. Now, the one consideration here is these things are very difficult to borrow. So short side is going to be tough. Locate is tough. But if you just flat out, we're trying to save people money here as well. When stocks break in the pre-market and have those kind of moves up and then those kinds of sell-offs afterwards, you've got to note them. And you've got to note it's all about this momentum market. When the momentum gets going in one direction, it's hard to break. The momentum was going at 4 o'clock in the morning yesterday on these 4 stocks, Riot, MARA, SRAX, and XNET, and it broke at 4:30. You noted that. We noted that yesterday as well. So if you're coming in there trying to buy them on the open yesterday, you're on the wrong side of the trade. And these things opened up near the highs, all of them, and they gave it all back almost all day yesterday. I mean, the Riot, RIOT, opened up. I'm just trying to look at the chart here there from yesterday where it actually opened at 9:30. Opened up right near the high, around $21, and boom, within like 10 minutes was down at 17. So you got to know what side the momentum's on. And the momentum, which might have appeared to have been higher because, the Bitcoin was having a pretty good day, was not, because Riot was actually trading at 29 at 4 a.m. and was trading at 22 now. It had already broken.
And we talk about that opening print. I was hoping to get near the close at 23.60, but there was just too many people underwater. 21.67 open, went another dime higher at 21.77, and then kaplooey, went down to 15.54, trading up a few cents here in the pre-market. Keep an eye on that close end because it was right near the low as well. 15.54 and 15.60, your 3-day low, down at 11.40. Bitcoin struggling at 10,000, Dennis, now only up 2.6% at 98.58.
Broke through the 10,000 though, and that's impressive.
Yep. So, all right. Analyst ratings. Do we have anything on that front?
Atlantic with a pair trade. They're upgrading Home Depot and they are downgrading Lowe's. So we've got HD trading up in the pre-market. Atlantic doesn't, have a lot of weight to them, but everybody knows an upgrade or a downgrade. And HD this morning is getting upgraded and Lowe's getting downgraded. So check out the charts on these two. What are you thinking?
Lowe's, let's see if there's, I don't know, the major resistance is coming down off the $82 level. So that's being predicted. Was it hitting it much in the pre-market? Let me take a look.
No, it's not getting much action. No. So LOW, it's offered down right now at 79.70, close 79.83. So it's going to open down, what you expect on a downgrade. But there's a bid at 79.20. It was trading 79.50. I don't think they're going to come kill this, like, a square deal where it's going to fall $2-3. I mean, it was just downgrade to neutral. And, it's Atlantic. So it's not like, a real heavy, they have influence, but it's not like it's Goldman or JP Morgan or Bank America.
79.11. That was your low on Friday, your close right there. So I'll look at that as support. You also had a 79.17 low on 17. So there's a pair of lows to keep an eye on. And it's hard for me. If I'm bullish Home Depot, I'm bullish Lowe's. I can't, not one, these kind of things, pair trades from Analyst, something you never would have seen a while ago. Wow. All-time high yesterday, 174.91. I don't even know if there's any paper at 175. It closed at 174.16. So you might have someone sniffing around there at 175, but that good looking chart, just hang it up, 174.95. Dennis, can you see if there's any paper there at 175?
You're looking here at Lowe's now?
Home Depot, 175.
Okay, hang on, sorry.
That's okay.
Going to the book here right now, and when Joel says paper, he just wants me to go look at the book. I see 11,000 shares there. It does stand out. There's nothing really at any other level. It's early here yet, so there could be something, that could grow there. So, whenever you see a top out just below a big whole number like that, you think there might be something at the point. 11,000 is at the point right now, but, they may not be showing their whole hand either, so there could be a bigger order there as well. But, takes out that. Obviously, it's all-time highs here again. Spencer, any other ratings changes that you noted that you want to talk about?
Nike catching a downgrade this morning from, who is that from again? HSBC, downgrading Nike. Barracuda catching a downgrade from Needham. They've been the most active in this issue.
Well, Akuda's taken over now, so that's done.
Oh, right. I forgot about that. Sorry about that.
Yeah,
Yep.
Akuda got taken over there yesterday. Happened after, I think it was announced just after our show ended.
You're right.
So it was just after 8 o'clock. So Kuda's off the board. And downgrades this Analyst adjusting now for obviously takeout price. Anything else?
No, just the Nike downgrade. We talked about the pair trade from HD and Lowe's. That was really it. Not a whole lot today.
Let's talk Nike.
Yeah.
So here's the stock. I'll just give my quick thoughts, and Joel will give you the technicals here too. This has been range bound. I'm going to tell you for 2 years. We've been between $50 and $60 pretty much since 2016. Every time it gets up to 60, it seems to fail. Every time it gets down to 50, it finds support. We just actually went through the whole range in about a month and a half. We got down to $50.35 back on October 12th. Now we're kicking up here at resistance of $59.70. Obviously, HSBC is looking at their technical charts here with this downgrade. It's right back up here at resistance, where it has failed multiple times. So I agree with them. I mean, 60 has been resistance, 50 has been support. Trade the range. What was that site, channelingstocks.com, back in the day? Buy low, sell high, the same stock again and again. Stocks tend to change on a channel. This would have been their prime example of stock chart like this for the last 2 years. Nike.
Yeah, I actually, before you even went on that little rant there, I had pulled up the monthly, and I knew you were going to go there with it. And so here it is, getting a downgrade. I mean, 60 has been the level in Nike, going all the way back until May of 2016 when you had a 59.99 high. So see what happens. I mean, obviously in this environment, stocks can break out and run, but such a long-term resistance point. You got to think that not only retail investors are looking at this, but institutional investors have been using this the $60 level as an exit point. All right, Spencer, 8:59 and 15 seconds. You want to wrap up today's show and let us know what's on the docket for Wednesday?
On the docket for Wednesday is our banking guru, Tim Melvin, will join the show. He's the author of Banking on Profit on Marketfy, and he's a small bank investing trading specialist. We know that he pays more attention to those than to that sector than anyone else that we know. Not so much the big banks, Goldman Sachs, JP Morgan, but the small regional banks. And he has great analysis on that. So we'll be joined by Tim Melvin on tomorrow's show. If you want to catch any part of our show from today, again, you can do that on iTunes, SoundCloud, and Stitcher, or by going to youtube.com/Benzinga TV to catch the show as it aired live there. Don't forget to like us on Facebook as well at PreMarket Prep, and follow Joel and Dennis on Twitter. Joel is at Spoos, Dennis is Triple D Trader. And that's it for our show today. So everyone, hope you have a good rest of your day. We'll be back with you on Wednesday.